I think I started cutting the grass of my neighbor's house when I was about 12. Now, they would pay me a good amount of money just to cut their grass, which would keep growing all summer. At the summer's end, I could buy myself a few fun things. I saved up enough money one summer to build my gaming computer. Now, if I wanted to make money from mowing, I wouldn't do it. Now that I'm 24, I'll look for other young Theodores like me and join forces with them. I might be able to find someone to buy their yard mowed for $30. Then I'd give young Theodore $20. By doing it this way, I can make $10 every time it is mowed without doing much more than setting it up and taking a small risk. I'm buying a few things for $20 and selling them for $30, which sounds terrible in the grand scheme, but the yard owner benefits because I'm helping them keep their yard in good shape. Little Theodore benefits from having a job because he doesn't have to worry about keeping in touch with the yard owner and me. Big Theodore makes $10 by taking part in a lawn service arbitrage. In this video, we will explain crypto arbitrage and how it works and give a quick answer to whether or not it is possible. First, let's figure out what arbitrage trading is. Just like our lawn mowing example, arbitrage trading in cryptocurrencies means buying low and selling high, or selling for more than you purchased. In the case of cryptocurrencies, it means accepting them somewhere and quickly selling them elsewhere where they are worth more. Now, as you'll see in the following few examples, you're acting strategically, which usually happens in a few minutes. You're not asking prices to go up or down by 10% or 5%. It doesn't matter how much it costs. Only in comparison is it essential that you can buy it elsewhere and sell it elsewhere for a profit. You may be wondering how this can happen. Well, different cryptocurrency exchanges have different amounts of cash on hand. It was a lot of words to say. On each exchange, people buy and sell, and the price of each cryptocurrency is set by how much people buy and sell on that exchange. Sometimes the price on one exchange is different from the price on another exchange by just a few dollars. Now, crypto arbitrage is less risky than day trading or swing trading because I'm not depending on what I think the price will do. Instead, I'm making money based on how the market is right now. Many traders think of this trade as risk-free because all you have to do is find an opportunity and make money. For example, if you found someone who wanted to sell a house for $300,000 and someone who wanted to buy the same house for $320,000, you could act as a middleman and handle the deal for a profit. Since you aren't even buying the house, there isn't much risk. Let's take a look at a few examples. The first and easiest to understand type of arbitrage is a simple or direct one. You buy a cryptocurrency on one exchange and then sell it on another. As an example, I might buy a Bitcoin on Coinbase for $30,000, move it to Binance, and sell it there for $30.05. That would be a $5 profit for just a few minutes of work, unless I could buy a lot of Bitcoins, in which case I would make a little more. This is where things start to get complicated. The simple or direct method only works temporarily until the price on Coinbase increases because of my purchase, which tells sellers to raise their asking prices. Also, if I sell it on Binance, the price will go down because fewer people will want to buy it at the higher price I'm asking. You need to know that I can't do this for 10,000 Bitcoins before the prices are the same and I can't make any more money. In this situation, it's important to remember the fees and transaction costs. Due to how popular the network is, there are times when sending Bitcoin can cost up to $20. Coinbase has its costs for buying and selling, just like Bin, so some of your profit will go to them. Basic or direct arbitrage between exchanges can be profitable, but some bots can do it all the time. Most arbitrage opportunities automatically have riskier, less developed currencies on smaller, less well-known exchanges. The next thing I want to talk about is triangle arbitrage. It's a bit more complicated now, but it still works and makes some people money. We have to stop you from thinking in US dollars. For this, you need two tokens that don't have to be SD. For this example, we'll use Uni/E, which means you buy Uniswap, trade it for Ethereum, and then sell Ethereum. If you don't know much about this, it might be hard to see that you are making money from the Uni/E transaction in this example. This exchange pair looks at how much these two assets cost about each other. If you look at it this way, you are buying Uniswap tokens based on how many Ethereum coins they cost, or the other way around. They call it triangular because it comprises three assets: Ethereum, the USD Uniswap token, and you make money if you charge more or less for one of these. Many people don't know that this triangle comprises three pairs: USD/Uni, Uni/E, and E/SD. So, let's go through an example. People like me who like numbers need to know the costs first. In this case, it will cost $20 for each USD/UNI. The price of E in euros will be 90 euros, while the price of E in dollars will be $2,000. Next, let's say you put in $1,000. You can buy 50 Uni swap tokens with this. Then you trade 50 University swap tokens for Ethereum. If we use the exchange rate I mentioned before, which is 90 Uni tokens for 1 Ethereum, we get 0.555 Ethereum. All that's left to do is trade Ethereum for 0.555 in cash. Even though $1,111 is a nice number, it also means that we made a profit of $111, or about 11%, from our triangle arbitrage. You might first think, what if we tried this with $10,000 or $1 million? The prices of the tokens will change based on how we use them, since that's how exchanges figure out their prices. This means that we won't be able to keep doing this forever. We, as traders, have raised the price of Uni since we bought it and lowered the price of Ethereum since we sold it. This means that there is only a small margin on which we can make a profit before the random chance is gone. The critical question will soon be asked. Is it going well? Yes, it does make money. It has been done for a long time. They did it in international exchanges and even with other assets before they tried it with cryptocurrency. People still make money by trading the US dollar for the yen, the peso, and then the euro again. They do this all day long because there are small differences in prices worldwide, and they do it with a lot of money. In the world of cryptocurrencies, there are over 200 easily accessible exchanges where you can write a script to pull data and find price swings that could make you money immediately. In reality, you can see all these price changes for yourself if you go to coinmarketcap.com, choose a coin you like, and then choose markets. But people don't get any cash from these well-known transactions. The money is in small exchanges that bots haven't been able to get into yet. While talking about bots, let me tell you what we learned about trading bots. People will make bots that can do this quickly because it's an excellent way to make money, and being the first to find inefficiencies is a good way to make money. The ideas in this video are being used by a lot of bots to make money right now. There are even trading websites where you can sign up and look for arbitrages. Still, they aren't very popular because there are already so many. We can't give any advice because there is so much competition and because robots can do the things we do in this video much faster and better than we can. We won't try to do crypto arbitrage because it's outside our areas of expertise and, despite what some people say, we think there are risks involved. One of them is the time you waste looking at prices all day when you could be doing something else. A bot that is made to do these things is very hard to beat. As we end, we want to thank you for watching. We hope this video was fun for you to watch. If you enjoyed this video, don't forget to subscribe to our channel.